Good afternoon, everyone. Today we're going to talk about the TRIX. TRIX is a momentum oscillator. It was developed by Jack Hudson in the early 80s. And traders use TRIX to generate buy signals. I use it when the oscillator crosses above the center line, or the zero line as most people like to call it. So let's go ahead and look at some examples. The first one is a chart of Anthem, A-N-T-M. And as you can see here, I've got some moving averages. I've got the TRIX oscillator as well as the volume. And the TRIX gives you a couple of buy points, buy signals here. One is right around here on November 3, and one is right here, which is on January 20. So just remember that when you take some of these trades, you're not always going to make money. Sometimes you're going to lose, sometimes you're going to break even, and other times you're going to do really well. So I just want you to be aware of that. In this case, for instance, if you take the trade here at this buy signal at around 121, and I like to sell when the stock closes below the 20-day moving average, which is this yellow line here. So if you take that trade at, I think it was 123, and sell here, for instance, at 124, you're not going to make too much money. But then this buy signal, for instance, does a lot better. So if you purchase a stock at 130 and hold it to about here, 154, you're doing really well. Okay, and here's a chart of Apple. Gives you a buy signal here where it crosses above the zero line at around 104. Purchase the stock there and hold it until it breaks the 20-day moving average, which is this yellow line here, which is around 114. So that's a $10 move. And then you wait until you get another buy signal, which comes right here on January 29 on pretty good volume. So if you purchase the stock here, which is around 117, you can ride it up until it breaks the 20-day moving average, which is around 126. So that's around a $9–10 move. Okay, and here's this chart of Google, and you don't get a buy signal from November to about February, which is a good thing because the stock is clearly on the downtrend, trading below the moving averages. So you're not going to make any money here. So the TRIX oscillator keeps you out of the trade, which is a good thing, until about here when it breaks above the zero line, right here. So if you purchase the stock here at 526, it doesn't break the 20-day moving average until about right here, 550. So that's a pretty good move. And here's this, and you can also do it with ETFs such as the SPY. You get a buy signal here at around 200, and you can ride it up until it breaks the 20-day moving average, which is around 205 for around a $5 move. And you also get another buy signal here at 208, and it breaks the 20-day moving average at 209. So that's a $1 move. Okay, so some trades are going to work better than others. Like for instance, this one, Yahoo. You get a buy signal here for a nice strong move until it breaks the 20-day moving average. And then you wait until you get another buy signal. So it's consolidating here, moving down until about right here, where you can purchase the stock at around 44-ish. Okay, and here is a chart of W. You get a buy signal here for a nice $7 move. And here's a chart of MasterCard. And you get a buy signal here. So at around 79. And you hold the stock until it breaks the 20-day moving average, which is around 85 for a $6 move. And you wait until you get another buy signal here at around 87, and it breaks the 20-day moving average at 89 for a $2 move. That's